Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now in this video I'm continuing the problem on calculation of depreciation according to the provisions of Income Tax Act 1961 for the current assessment year 21-22. For the assessment year 21-22, the previous year is 2021. That means the year will begin, previous year begins from 1st April 2020 and ends on 31st March 2021. For this previous year, for this assessment year, what are the provisions regarding calculation of depreciation? So already in the last video I have completed 2 problems on valuation of stock and 3 problems on calculation of depreciation. Apart from that, 2 more videos I have uploaded on the complete provisions of Income Tax Act regarding depreciation. If you have not watched, I suggest you to go to the playlist of my channel, select the subject Advanced Aspects of Income Tax. Watch the initial videos, be thorough, be clear regarding the provisions. Without understanding the theory, you cannot understand the problems. That's my suggestion to you. And apart from that, I have started a new channel by name Khan's Accounting Institute for those students who are pursuing IGCSE courses. So please forward this message to all your colleagues, to all your friends, so that they may join and they may take the advantage from this channel for those who are pursuing IGCSE course. You too can go and watch the videos and enhance the knowledge, and do subscribe that channel too. And before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Without having problems, you cannot understand the theory. So always keep in hand the problem set and take a screenshot of the solution which I have written on the board. Then I'll explain it. Come on. Now I am starting problem number 4. Mr. Srinivas Rao owns the following assets on 1st April 2020. Find out the amount of depreciation for the assessment year 21-22. The beginning of the year, 1st April 2020. What are the assets this Srinivas Rao is having? Assets. Building number 26, building number 27, building number 28. 3 buildings. Then plant number 1, furniture number 10, plant 2, plant 3, furniture 11. So beginning of the year, 3 assets are there: building, plant and furniture, right? Actual cost is given and WDV on 1/4/2020 is given. We are not concerned with the actual cost. We want what is the WDV, written down value, book value at the beginning of the year. So we are given all the book values. Rate of depreciation is also given, right? Building, first building 10% debt, second building it is 5% debt. So both the building cannot be clubbed. A block of assets means a group of assets of the same nature and same rate of depreciation. Same nature and same rate of depreciation. Now the assets purchased by Mr. Srinivas Rao during the previous year are as under. So it is given how many assets he has purchased during the year. Building number 29, building 30, furniture 12, plant 4, plant 5, plant 6. These are the assets purchased during the year. Cost is given and dates are given, date of purchase. See, the date of purchase are 4th April. We require date of purchase because according to the provisions of Income Tax Act, if an asset is purchased and used for less than 180 days, then 50% of normal depreciation will be allowed. If less than 180 days, if it is used in the first year of purchase, then 50%. So we have to see which assets will have 50% debt and which asset will have full 100% debt. So here the first building number 29 was purchased on 4th April 2020. Actually our year ends on 31st March 2021. So see here, asset purchased on 4th April 2020 and year ends on 31st March 2021. So more than 180 days. So first building 29 purchased for used and more than 180 days. Second building number 30, 10th January 2021. Building number 30, it was purchased on 10th Jan 2021. We are closing the accounts on 31st March 2021. That means it is less than 180 days. Only in the month of January it was purchased. And we are closing the accounts on March, 31st March. So this building number 30 is an asset which is used for less than 180 days. So we calculate 50% of normal depreciation for this building number 30. Then furniture number 12, purchased on 15th September 2020. So it is more than 180 days. The next one, 18th June 2020, more than 180 days. 20th February 2021. 20 February 2021. That means less than 180 days. Because we are closing the accounts on 31st March 2021. Last, plan number 6. Purchased on 1st March 2021. We are closing the accounts on 31st March 2021. So less than 180 days. So out of so many assets, how many assets are there which are purchased and used for less than 180 days? 3 assets are there. First is building number 30, which was purchased on 10th Jan 2021. Then plant number 5, purchased on 20 February 2021. And plant number 6, purchased on 1st March 2021. These 3 assets are purchased and used for less than 180 days. So 50% of normal debt will be applied on these 3 assets. Now the assets sold by Mr. Srinivas Rao during the previous year are as under. What are the assets sold? Building number 27 sold. Plant 2 sold. Plant 3 sold. Furniture 11 sold. Now date of sale. During the current year it is sold. We are not concerned with number of days, etc. During the current previous year it is sold. Selling price, sale price is given. That's it. This is the complete explanation of the problem. Now we will start. First of all, block-wise. According to the provisions of Income Tax Act, depreciation should be calculated on the block of assets. A block of assets means a group of assets of the same nature and same rate of depreciation. Nature means all should be building, all should be plant, all should be furniture. Same nature. Rate should also be same. So first I am taking block number 1, building with 5% debt. See here, in the opening balances, first building number 26, 10%. Building number 27, 5%. So there is building with 5% debt. So I am taking building with 5% debt. Opening balance 1/4/2020. So which building is there? Building number 27, WDV 6,78,000. WDV 6,78,000. Any other opening balance of building with 5% debt? No. No other building. Only one building is there at the beginning of the year with 5% debt. Now purchased. See any purchase of building with 5% debt? Yes, one building is there. Building number 30. Building number 30. It is used for less than 6 months. This building was used for less than 6 months. That means 50% of normal depreciation will be allowed. It should not be included in the block, but it should be calculated separately. But in the sale of assets, you can see the assets sold are building number 27. This 27 building was sold during the year for 16,80,000. What is the WDV of the building at the beginning of the year? 6,78,000. And this 6,78,000 building was sold for 16,80,000. If only one building is there in the block and that is sold, we would have taken the difference as capital gain. The book value of the building 6,78,000 and the sale proceeds are 16,80,000. The difference will be called capital gain. But in this problem, one more building was purchased at 5% debt. One more building was purchased at 5% debt. Which is that building? 30. So we should include that building. We should include that building. This building number 30 should not be taken separately because already there is a block. Already there is a block. So building number 30, 15 lakh. So now you add up 678 plus 15 lakh. 21,78,000 is the total. Out of which sold during the year. Building number 27 was sold for rupees 16,80,000. 16,80,000. Subtract. 4,98,000 is the WDV of the building at the end of the year. The opening WDV was 6,78,000, purchased during the year 15 lakh, and sold during the year 16,80,000. So 4,98,000 is the WDV of the building at the end of the year 31st March 2021. Now we have to calculate 5%. 5% of 4,98,000 into 50%. Into 50%. Because in this block, this old building was sold and only new building is there. And the new building, building number 30, was used for less than 180 days because it was purchased on 10th January 2021. 10th January 2021. And we are closing the accounts on 31st March 2020. As the newly purchased asset is used for less than 180 days, hence 50% of normal depreciation is allowed. So normal depreciation 4,98,000 into 5%. So 4,98,000 into 5% into 50%. It comes to 12,450. So 12,450 is the depreciation on block number 1, which consists of building with 5% depth. Now you have to remember the point. The opening balance of asset is sold out with profit. Opening balance of asset 27, and this 27 is sold out. Resulting in profit, because book value is 6,78,000, but it is sold for 16,80,000. There's a profit. The same cannot be treated as capital gain because still there exists one more building. If no other building are there in this block, only one building was there and it is sold, then capital gain will arise. But here the block is not closed because one more building has come. One more building has been purchased. So as the newly purchased building is used for less than 180 days, so 50% of normal depreciation is allowed on this building. That's all. This is a complete explanation on block number 1, building with 5%. Now I am coming to building with 10% debt, second block. Block number 2, building with 10% debt. Now, opening balances. See the opening balance. Building number 26, 10% debt, 7,89,000. Building number 26, 7,89,000. Then building number 28, it is 5,65,000. So building number 28, 5,65,000. So two buildings are there in the opening balances with 10% debt. So 10%. So add up both 13,54,000. Now see any building purchased with the 10% debt. Yes, there is a building with 10% debt, building number 29. It was purchased on 4th April 2020. Purchased on 4th April 2020. And we are closing the accounts on 31st March 2021. So more than 180 days. So we include. So building number 29, 14 lakh. Add up both, 27. See any building 26, 28, 29. Any building sold during the year? No. There is no building sold 26, 28, 29. Out of these three buildings, no building is sold. You can see the sale of assets. Dash. So WDV, written down value at the end of the year is 27,54,000. Now depreciation is 10%. 10% of 27,54,000, 2,75,400. Two blocks completed. Block number 1, building with 5% debt. Block number 2, building with 10% debt. Now block number 3, plant with 15% debt. Plant with 15% debt. Now in the opening balances, see which are the plants with 15% debt. Plant number 1, 1,65,000, 15% debt. Plant number 1, 1,65,000. Then plant number 2, again 15%, 3,33,000. Plant number 2, 3,33,000. Again you see plant number 3, 15% debt, 12,55,000. 12,55,000. So plant number 1, 2 and 3. All the 3 plants at the beginning of the year, it is there with 15% debt. Taken. Total 17,53,000. Purchased during the year. Now see the purchases list. In this, any plant with 15% debt? Yes, there is one. Plant number 4. Plant number 4 purchased for 1 lakh rupees Date of purchase 18th June 2020, 15%. 18th June 2020, that means more than 180 days. So we include here plant number 4, 1 lakh. Add up 18 lakh 53,000. Now 1, 2, 3, 4, 4 plants are there. Any of these plant is sold during the year, see the sale list. Plant number 2 is sold, plant number 3 is sold. Second plant and third plant sold away. So second plant and third plant, these 2 plants are sold away. At what price? 3,40,000 and 12 lakh. 3,40,000, 12 lakh. Total 15,40,000. Deduct 3,13,000 is the WDV at the end of the year. Written down value at the end of the year. Now depreciation is calculated 15% of 3,13,000. 15% of 3,13,000. 46,950. 46,950, that is the depreciation. Now block number 4. Plant with 15% depth, but it is used for less than 180 days. Now you can see purchase opening balance list we have seen. Now purchases list. In the purchases list you can see plant number 6, last plant. Plant number 6, 8,90,000 purchased on 1st March 2021, 15% depth. Plant with 15% depth we have not included here because it is used for less than 180 days. We have so many plants, right? So plant number 6, the asset is used for less than 6 months, hence 50% of normal depreciation. 8,90,000 is the purchase price. So 8,90,000 into 15% into 50%, half. 66,750 is the depreciation. Now plant, block number 5. Block number 5, plant with 40% depth. We don't have any plant with 40% depth in the opening balances. In opening balances we don't have, but we have purchased. Which plant? Plant number 5. You can say plant number 5, 19,65,000 purchased at 20 February 2021. 40% depth. So only one plant is there with 40% depth and newly purchased and used for less than 6 months. The asset is used for less than 6 months and 50% of normal depreciation is allowed. 19,65,000 into 40% into 50%. 3,93,000 is the depth on the plant. Now last block is furniture. Furniture with 10% depth. Now see the opening balances. Opening balances, how many furniture are there which 10% depth? Furniture number 10, furniture number 11. 10 furniture 4,44,000, 11 2 lakh. You can see. Balance on 1/4/2020, 10 furniture, 11 furniture. 444, 2 lakh, 6 lakh 40. Now see any furniture with 10% depth purchased? Yes. Furniture number 12 is purchased, 6 lakh. Furniture number 12, 6 lakh. Take the total, 12 lakh 44. Now see any furniture number 10, 11 or 12. Is there any furniture sold in 10, 11 and 12? Yes. Furniture number 11 is sold for rupees 44,000. Furniture number 11 was sold. So furniture number 11 sold 44,000. Deduct 12 lakh rupees. So WDV of furniture block at the end of the year is 12 lakh. Now calculate 10% depth on 12 lakh. 12 lakh 10%, 1 lakh 20,000. That's all. We have calculated the depreciation according to the provisions of Income Tax Act on all the block of assets. I have explained each and every point. Now we calculate the total depreciation. First block. First block, the depreciation is 12,450. The first block is building with 5% depth. So building 5%, 12,450. Second block, block number 2, building with 10% depth, 2,75,400. Building 10% depth, 2,75,400. Next, plant with 15% depth, block number 3. Plant with 15% depth, depreciation is 46,950. 46,950. Then plant with 15% depth used less than 6 months, 66,750. Then plant with 40% depth, 3,93,000. Then furniture with 10% depth, 1,20,000. Take the total, 9,14,550. This is the total depreciation as per the provisions of Income Tax Act. So this is the end of problem number 4.